From the station that's on your side, this is Channel 7 News Good Morning Arkansas.
Welcome back to Good Morning Arkansas, everyone. Now, according to a 2021 report on educationdata.org, 12% of the Arkansas population is carrying student loan debt. The average amount owed per individual borrower is about $33,000. Listen to that. Here to explain how student loans actually impact your ability to buy a home is Jacob Rice, loan officer at Bank of Little Rock Mortgage. Jacob, thank you so much for joining us. Can student loans help or hurt your chances of getting a first-time mortgage?
Hi, good morning. Yes, thank you for having me. Who doesn't like to talk about student loans? But yes, it should certainly be factored in, and you will see it factored in. Mortgage lenders are going to take into account primarily, your student loan debt along with your other debts, whether it's car loans or credit cards and that sort of thing, when they factor in what the house payment's going to be as well. So yeah, they certainly will look at that as well as your credit scoring. So it's always important to pay your student loans just like any other debt. Make sure you are up to date and current.
So then, Jacob, I guess I'm wondering, how can individuals with student loans then gauge their chances of getting a mortgage?
Right. Yeah. Anytime, it's always, if you're really considering buying a home, it's always great to contact a lender, contact us, discuss those options, even look at maybe making an application where we can pull credit. Because like I mentioned, it's going to go into your debt ratios, what you're paying on your student loans, if there's a payment reported on your credit report at this point, and how it affects your credit scoring. And so when we look at that, we can talk about your overall financial picture, whether you're planning to take more student loans or you currently have some debt there. It is school time, so that's kind of back on the table at this point. In regards to student loans and qualifying for a loan, most mortgage lenders will factor in about a 43% max debt to income ratio based on your gross income. So if you add up your auto loan or any credit cards you have, and student loan payments, you want to look at your gross monthly income, and you really want to shoot to be at or below 45% of your gross income. So
Jacob,
it's a great way to talk with us and be prepared and have that conversation up front.
Don't you love Zoom calls? You would think that 17 months into this, we would be more fluid by now, but let's go ahead and continue. Jacob, how do student loans impact mortgage payment amounts?
Well, so as I mentioned, again, it's if we can look at, say, what is on your credit report, because what we're going to look at is what type of loan program might suit you best, whether it's a conventional loan or FHA or rural development or a VA loan. So in each of those entities might factor student loan debt a little differently than others. And if we can see your overall debt picture as well, we can look at what might be able to be changed to make the debt ratios fit as much as you can qualify for. So, and what's great news is that recently FHA has started to come down on what they require we look at for student loans. Typically, if there's a payment reported on the credit report, we can utilize that payment that's reported. But if it's in deferment or if it's not reporting a payment, if it's not in repayment period right now, then a lot of the entities will require about 0.5% payment based on the balance. So a $100,000 student loan, you're going to be looking at, a $500 payment per month. So, and that's a debt ratio factor we have to account for.
Okay, so then what should potential home buyers who have student loan debt do first? What's that first thing?
Well, if you're considering buying a home, I would urge you to apply and speak with a trusted loan officer, mortgage company, and go through those figures with us, talk with us about it. If we end up running your credit, we can get a great picture of, what those debt items are, how much we need to account for on the student loans, and, what other debt is there and how, could that be adjusted somehow, or how is that factored into the overall picture? if you're going to speak with your loan provider for student loans, the main thing is determining what payment, if you have a payment now, what is that payment going to be? Is that what is reported on the credit report? Because oftentimes we might see someone that has a deferred payment, but they've been making it, it's misreported. So if we can look at that information up front, communicate that with the borrower, make sure that matches what they're seeing and what they're paying and what they're doing, then we can get a better picture of how it affects the overall debt situation. And that affects how much we could qualify for them on a new home payment.
Right. Well, Jacob, we are about out of time today. So if we have viewers who would like to learn more about applying for a mortgage, where should they turn?
Absolutely. We'd love to speak with you. We love having these conversations by phone, by email, any way possible. Check us out on our website at www.blrmortgage.com or call us at 501-219-9100. Or obviously we're on Facebook and Twitter.
Absolutely. Hey, like I said, sometimes these Zoom calls, they get to us after you've done so many of them. But Jacob, we thank you so much for joining us here today. Viewers, stay with us. We'll have more Good Morning Arkansas next.